Hi guys, Chris Ingram here, financial advisor with Prosperitas Financial, and something that's been going on recently that I have explained in the past, but I'll explain again, is the effect interest rates have on bonds. Interest rates have been on the rise, if you haven't heard, and that does have a negative impact on the value of your bonds in your portfolio. So here's how I like to describe it. If a client came to me and bought a bond from XYZ Corporation for $10,000, okay, and that bond is paying 3% interest, that they now have that bond, okay, and let's say they want to sell that bond. But interest rates have gone up. So a new client walks in the door and they can buy a $10,000 bond from me that's paying 5% interest. Well, my client over here that has a bond paying 3% in interest, who's gonna want their 3% bond if they can get a 5% bond, right? So in order to make their 3% bond more attractive to the other buyer who can get a 5% bond, they have to lower the value of their bond and take less money for it to compensate for the adjustment in that interest rate. So they may be able to unload that $10,000 bond and sell it to somebody else, but they may have to sell it for $9,000 or $8,500 in order to get the other buyer to buy their bond versus the 5% bond that they can currently buy in the open market. So this is how those rising interest rates influence the value of the bonds, and it's reflected on your statement. So if you own bonds in your portfolio, the bonds in your portfolio are getting a daily value attached to them based on the current market. And if interest rates are going up, you're seeing the value of your bonds in your portfolio drop, showing what they are currently worth to the average buyer in relationship to current interest rates. So this is where it is unfortunate in a bond market where when you get rising interest rates, it has a negative impact on your existing bonds in your portfolio. But if you have a bond mature and come to term and you get to reinvest that bond, well, now you get to go buy bonds that have higher interest rates attached to them. So interest rates are a double-edged sword, but they do have a negative impact on your bond portfolios in the near term. And so you need to be aware of that and know that that is why you might be seeing a drop in the value of your bonds in your portfolio, given what has currently happened with interest rates. For more information, come check us out at Prosperitas Financial.